Hey guys, welcome to the Max Invest YouTube channel. Today we are going to be looking at the disruptive insurance company called Lemonade. If you enjoy the video, remember to like and subscribe, and remember nothing said in this video is financial advice and you should always do your own research. Lemonade offers renters, homeowners, pet and life insurance powered by AI, and they are generally considered a disruptive insurance company. Now, Lemonade like to do things differently to the other insurance companies. What they will do when you pay them for your insurance is they will take a flat 20% premium paid, and then the remaining 80% is used to cover insurance, and then the rest is given to charity. This is quite different to other legacy insurance companies who try to take as much money as possible from the person they are insuring. Lemonade are upfront about what they are doing and are very clear with what they are using their money for and how much money they are going to be taking. As such, many people being insured feel like they are not at war with the insurance company, and they do quite like this. Lemonade is focusing more on millennials and aims to be enjoyable and easy to use. Insurance can be received in just 90 seconds through the Lemonade app. AI will guide individuals through the process, and all they need to do is message Lemonade and speak to the camera, which is quite easy and quite different to a lot of the other insurance companies. As such, this has helped Lemonade get to 1 million customers in record time. Lemonade have been growing faster than any other insurance company, have hit 1 million customers very quickly in only just a couple of years. Lemonade also get in-force premium per customer of $213, which is 20% year-on-year growth, and they have had gross earned premium growing significantly at 92% year-on-year growth, and annual loss has been getting better and better. However, many were concerned with Lemonade's numbers, as they had 940,000 customers last quarter and only 1 million in the most recent quarter. This is quite slow growth of around 6% and is one of their slowest quarters yet, which has been reflected in the share price. Now, Lemonade are going quite well. Their total revenue at the end of the year was 94.4 million relative to 67.3 million, which is some very solid growth. Their customers went from 643,000 to over 1 million, which is also pretty solid for Lemonade, and it'd be good if Lemonade can continue this rapid customer growth coming into the future years. Lemonade's adjusted EBITDA has also gotten significantly better, from negative 106 million to negative 97 million, which shows they are becoming more and more profitable as the quarters go on. Now, let's take a look at Lemonade's growth prospects. Lemonade are going to be expanding into Europe, but only online. They will not be setting up shop in Europe, they will just be putting their services into Europe online, which is pretty, well, I don't know, but it is definitely easier to do than set up shop in Europe. This is good, as it means Lemonade can easily expand globally and offer their services to people all around the globe. The analysts also expect this stock to be doing quite well, with 114 million in revenue in 2021 and 181 million in revenue in 2022, which are some solid numbers, and they represent 21% sales growth and 57% sales growth. So if Lemonade can achieve this, this will be very good for the share price and very good for the company. Now, Lemonade also expect themselves to be going quite well. They expect revenue to be increasing this quarter up to 21 million to 22 million, and they expect all of their other numbers to be going decently. For the full year, they expect revenue to be around 114 to 117 million, which would be pretty solid growth, but I'd honestly hope for a little bit more from this disruptive insurance company, and I think they are being slightly conservative here. Now, we do also need to take a look at Lemonade's management team. Daniel Schreiber is the CEO of Lemonade, and he owns 3.3% of shares, which account for most of his net worth, which is quite good. He has held these shares, and it is quite reassuring for the company, as he believes that the company is only going to go up from here. He is also the co-founder of the company and has been in the company since its inception in 2015. Overall, insiders own 11% of Lemonade's shares. which are some pretty solid numbers of insider ownership, and hopefully it can stay roughly the same, or insiders will continue buying more shares as they believe in this company. The CEO has had extensive experience in other companies, just like the Chief Financial Officer. The Chief Financial Officer has been there since 2017, so he has clearly done quite well for Lemonade already. He has held positions in other companies like Shutterstock, and Lemonade's management team do actually seem like quite a professional management team. Of course, Lemonade has tons of risks. The first risk is Lemonade's valuation. They're earning about $20 million in revenue each quarter, roughly. However, they have a market cap of over $6 billion. This does seem like they are trading at an extremely high valuation. They are also in a highly competitive space. The insurance industry is hundreds and hundreds of billions of dollars, and there are tons of insurance companies in it, and it is not growing that much, at least not as much as company or sectors like electric vehicles and, vegan foods. It's not quite growing that much. Lemonade's business model may also not quite work as well. They are taking a very different approach that hasn't yet been proven, and taking only 20% and then leaving the other 80% may actually not be that competitive for Lemonade into the long term. As we can see, Lemonade's share price has dropped significantly from highs of around $180 all the way down to a low of around $86 in recent times. Much of this is due to the recent tech sell-off that happened, and then Lemonade reporting a bit lower customer growth than what they were expecting. This did, however, put the price quite low, but it is still at around a $6.5 billion market cap. Now, of course, if Lemonade can grow to even just take out 1% or 2% of the insurance industry, they would grow 10 times in their share price. However, it is, as I have already said, a highly competitive space, and they may not be able to do that, and it may be difficult for them to do that in the upcoming years, especially with some pretty low revenue growth and not that many customers compared to the massive insurance companies that there are. So currently, for me, I am not going to buy Lemonade at these prices. When it got down to $86, I was still thinking that's probably too high for what Lemonade are doing right now with their numbers. I would prefer to see Lemonade stock drop significantly, or I would prefer Lemonade's earnings and their revenue and their profitability to continue to increase, and then maybe in a few years, even if the stock price doesn't drop, it will simply be safer for me to buy into Lemonade, as their increases in price will have already been proven by then, and it will be interesting to see if Lemonade can deliver on their current valuation. If they continue growing customers at a massive rate, and they can nearly double their customers this year, it probably will deliver on this valuation. However, this may not happen. Now, if you enjoyed the video, remember to like and subscribe. And thanks for watching the video.